This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to Wednesday's morning call. So if you wake up this morning, you look at your iPad, your iPhone, or your Samsung, whatever it is, you look overseas, and you see big gains again. You see in Asia, the Nikkei, wow, 7% plus gains overnight. The Shanghai actually had follow through up 2.3%, and other areas around there also higher. It's pretty funny and cute, when you use a contrarian indicator, how last week, I think every time you looked up at the TV set, all they talked to you about is when the Chinese markets open, be careful. You can't be in the stock market. It's going to implode. So usually the market tries to make as many people look as bad as possible. So anyway, 2 days of upside, giving us a tailwind. You take a real quick look. Let's look at the, the FXI, which is, a proxy for a lot of the Asian markets. Here you have a bit of a double bottom. There's your gap up that didn't get filled, giving some clues you can get more power and upside. So I would say if you're in the FXI, you have a resistance zone, which comes in between, just say 38, and the low here is, about 40.80. So that's probably your next spot, and then obviously this little 28-day along the way, which comes in around 39. So I think we're probably going to be opening up between this little spot here, 37 to 38, and then I do think ultimately we could at least retest this prior pivot, which comes in actually there at 38.88. As far as Europe, Europe's up about 2% across the board. You look at HEDJ, looks like a lot of the indices that we've been talking about out there, how you've had this inside wedge. Okay, and the question is, which way would it resolve? And yesterday, a lot of our markets started to resolve to the upside, so it gave you some clues that perhaps overseas can get some follow through. So if you're in this, your next spot to trim, is probably closer to 59, and you might even be seeing that at some point today. So here is your low, first reactionary move, held higher, some commitment in a lot of the European indices, and now you're getting some upside. As far as our markets are concerned, yesterday you had your first gap and go in a while, and your first gap that actually got protected. I know it was on low volume, and that's unfortunate at times, but you got to look at the price action. We've been talking about the wedge, okay, the lower pattern of indecision, because no one knew were we going to go back and test those Monday lows, or would we go higher and test the breakdown that we saw in August from that 2040 area. So you look at the chart of the SPX, and you will see that if we can get it up here, because it's a little slow, well, how about we do the spiders? For some reason, that doesn't like my SPX. Okay, you'll see that here was the range that we were in to start the year. And this was the range that got very tight right into here, traded and closed below the moving averages, giving you a clue to get out of dodge or get out of risk, maybe get short, especially when this engulfed this entire low end of the range, and now as you move down. So once you get a move lower, okay, you get a pattern of indecision figuring out what's next. You had some people saying, okay, the spiders are going to break these lows and go down to the 160s. Some think you have to retest the 200-day first. Well, anyway, you have this wedge pattern, okay, which is what's a wedge pattern? You have higher lows, higher low, higher low, higher low, higher low, and then here you had lower highs, lower high, lower high, lower high, and at some point you break this pattern. And as of right now, it looks as if we will be testing the upper end of the range. I am long some spiders. I've sold a little bit even before this morning call, somewhere into the 199.30s. Going to hold some and see, how do we react a little bit higher, because at this point the 21-day is coming down and it's curling right in, and that right there is a 199.48. Some people might short this right here. Okay, not a bad spot. If, maybe if you got short on this day and covered into the down open, you could fade versus this. I would wait for a 30 to 60 minute pivot to do that against, because you can't rule out, if we do close above this area of the range, you can't, in my opinion, rule out a retest of this zone. May not, obviously not today, but at some point, you could see north of 202.50 into, this 204. At this point, when you cross the apex of a wedge, you lean long, and that's why people like Redler, why'd you go home long last night? Because just the way things looked and felt, and I'm glad we had a little bit of upside follow through. As far as other sectors, the Qs did lead yesterday. Go right to the Qs. It actually closed above a pivot for the first time in a while. So today will be interesting to see, what happens here at the 200-day. Okay, this is a pretty big resistance spot coming across, and that's right at about, what is that, 106.30. Okay, so that's also a pivot. This pivot here is 106. So 106, 106.30 is going to be pretty big. Does it push above, fill this gap, and then come off, or does it hold? Okay, big move from here, but all in all, just like everything else, you had your wedge type pattern where this actually closed above a prior pivot, giving it some signal that if you wanted to be long something, be long some tech, and if you are, you're getting rewarded overnight. I would definitely sell some into this, and then we'll see what happens here into this gap fill. The gap gets filled at 107.07. And also, you look at the bigger picture, we've talked about this also, where, you've had this, active trend that was broken, and now you're getting this retest higher. Okay, retests do happen, and people, bears get excited, because when you do get a retest of a trend, if you covered in the hole, you could get the opportunity to re-short there. So you want to see what happens into this retest, and again, that's a little bit closer to 107, maybe even a little bit higher. But ultimately, there's been a lot of trading for the active guys leading into it. So you can see where that line is now. That actually comes into play a little bit higher. So if you start too early on the short side, you might get squeezed out and then be right, but not be able to handle it. So at this point, there is some room into this zone. And with that said, the Fed is meeting on the 17th, and I think what's today's date? Today might be, what is today? The 9th. So you got about a week and change. I also talked in my note about how the corporate buybacks, which have been going on, which is I think 50% of the volume, go into a blockout period on the 17th, meaning after that you're getting close to earnings season, they can't buy back stock anymore. So there's still some buy pressure here. There are shorts on the ropes. Maybe the institutions know this and they want to give you a bit more of a push, in the overall market. So come the 17th, maybe that'll be a better time to sell versus today, even though we could pause. So anyway, let's look at the bios, IBB. This too started acting better. If you're looking at the big picture, you'll see, this trend broke right there. Here was your head and shoulders pattern with your neckline. Okay, this was your left shoulder. Here was your head. Most guys covered their shorts well into this already. The measured move actually went even further. It was down to here. And now on Friday, it started acting better. Friday was the only indice to go green. And then yesterday, you had some power. So at this point, do you chase the bios on this up open? I would say not. Be careful. Do you just short the open? I would say, make sure you know where the real resistance is. You have 356, which is a spot, and then you have up to 360. So I would think you probably would rather short this spot versus buy your first share of IBB today after seeing relative strength Friday. You had a lot of opportunities yesterday to get involved, so buying it into here for your first time, it's going to be tricky. But if you short right here too, realize that there is a little bit more room with the moving averages going higher. So you just want to make sure that you know what you're doing here. So I would be a seller of your IBB longs into this, and just if you're going to look to be short, know that if it does push the envelope, because everything always goes further than you thought, there's 3 levels here. three zones, 356 to 360, then you have 364, and then you have 367. So, that's the story with the bios. With the banks got hit hard on Friday when you had that, that weaker than expected jobs Friday, but then played some catch up yesterday, as it seems if, markets are higher, they think the Fed looks at it and maybe you do get September liftoff. All in all, you look at the XLF, it's acting in line, nothing special, but if it wants to continue upward, to a little bit bigger resistance, here is the upper end of that wedge. Okay, and it did, give you a somewhat of a gap and go yesterday. So the banks, are kind of in line. If you want to roll through some quick banks, Goldman Sachs, they all look the same. They all have these lower pivots. I don't think you can get much momentum, but if you went long yesterday, maybe you have some room in Goldman to 189 to 190 to figure out if it fails over there. You could look the same thing. Morgan Stanley, cheated a little bit above its prior high, so it has some room to here. Okay, if it wants to get there. So I'm just giving you guys parameters for trades. If you bought into support or just got in yesterday, that's your resistance spot. And if these things really want to push, the 200 days are a lot higher. Citigroup is the bank that I bought yesterday. Just because I felt like it wasn't like it's the best bank or anything, but I figured it was clearing this little spot, and it too had some room to retest upper zones. So from this to 53-ish, or 54 maybe, you get just a trade. Sometimes you just look for trades in situations that have opportunities. So, if you got out of Citigroup, just say on this red dog reversal here or on this breakout failure, okay, you have the luxury of playing this lower range for some type of bounce. Bank of America, a lot of people are saying it's probably going to be one of the best beneficiaries if rates do go up. So, just giving you a look there. This also, look at the load of resistance right there. But if you're in it, there's a trade there, and if you bought it yesterday, you could probably sell into this 1647, and that's a nice trade for you. As far as the go-to names, the go-to names that have acted best, the ones that we focused on during the times of volatility, they all responded well and are tight. The question is, can they have any power? Can you, if you're not in them, on the open, can you get in them? Yesterday was tough. I did work into some of them. As far as some, just real quickly. Go to Apple. Okay, Apple's a little bit different. It has its big event today. Apple, to start of the year was very weak, right? Apple fell out of its resistance range, or its range, well before the market, and gave some clues that we were headed for a little bit of downside. And now you have this really tight range. It held higher. It was the first stock that I went to during that Monday. That Monday volatility, it acted very well on that bounce. So question is, can it break above this tight range? They always try and sell events for some reason. They always try and sell the news. You've heard that on Wall Street. So we'll see what happens here today. If they come out and they try and sell it and they can't, and it clears this, just say 113 to 114, you could see a move back to the perhaps 200-day, which is closer to 117.50. And if you see that in Apple, chances are in the broader indices, you could see a bit more upside. Maybe you'll see us take out 199.50 in the spiders and get to 202 or so, or 204 in the coming days, or the Qs maybe then get up to 107 to 108 versus just 106.30. So you got to think about things that way. Two names that are hard to trade but look pretty good. Google, had its really tight pattern, had its good earnings report. Look at how tight this is. Google does not typically get that tight. So see what happens today. It's probably gapping up above this. Some guys went home long this yesterday thinking we get upside. If you did, congratulations. See how we handle 651. And then, the next spot is really where it reflexed up to. At this point, it's acting a little weaker because look at where the pivot high was here, on that reaction. And right now, we're back at that reactionary high of that day, and Google's not there. So a little relative weakness as per the last week or so. But anyway, it is tight, and you'll see how this responds. Amazon actually, looked better. Amazon guys on the virtual trading floor were like, Redler, why don't you take this one yesterday? And I guess it would have been nice if I did. This cleared this prior pivot. It held in there very tight, and now it seems like you're going to get a little upside follow through. I think you trim some into that, and then I guess the next big obstacle comes in a little bit closer to the 535 to 540, but this is above all the moving averages. I guess this is the first chart I'm looking at where you have a high beta momentum name that's above all the moving averages. Tesla also actually looks pretty good considering that this is supposed to be an expensive concept play, but this expensive concept play already took back the 200-day, it already took back the 8 and 21-day, and looks pretty darn good. So the question again is, can any of these things get any power above descending channels? And this is at an inflection point. So see what happens here with Tesla. If you're in it overnight, maybe trim a little bit into strength. If you're not in it and you're trying to figure out, can it break above this spot? This spot's 252 to 255. Let's take a picture of that. I think that'll be pretty important to figure out whether or not there's upside traction in the market. Some people are asking me about MBLY. It's hanging in there, corrected like everything else, but it's still above the 200-day yesterday. Some guys saw a red dog reversal and bought it for a trade. That's when it trades under a prior pivot, comes back above it. So if that's you, you're going to see probably some resistance, coming into this thing. So it's going to need some time, but that's the resistance spot. If you do trade it on this breakout failure is when a lot of guys reduce their risk here. That's exactly on this day is when I sold out my long there. And now, I'm waiting. But if you have it in the draw, again, just like everything else, that means you're taking your time, and you think that overall there's a huge future, which I do think there is. And hopefully you got in here at this red dog reversal, or you got in when this descending channel broke to the upside, not chasing it up here for the first time. So anyway, give this a little bit of time, and maybe it works its way back to resistance. FIT finally woke up. FIT had an upgrade yesterday. It's been out of play because, again, expensive stock. It's a new issue, but now you do have your first sign of life here where you have a gap up. So see if it goes sideways, and perhaps, you get some kind of trade back into this zone. But yesterday was the first day, and, put it a little bit back on the map. In social, really, Facebook's the only thing that looks good. The question is, just like the other leaders out there, can it break above resistance? Here, I guess you could draw your line there. That's your next real resistance spot. Here's your tight range, which it started to poke its head above. So this is, what is that? That's 91.48. So see if it could get above 91.48. If it can, there's probably some room back to this area, which comes a little bit closer to 93.5. There is some news out on Facebook about Instagram and, rolling out more advertising space on there. You could read it. It's online. It's everywhere. You don't need to have me tell you about it, but there is some news. Check it out. It's supposed to expand their reach and could be good for their, revenue, which, is always good. As far as the oil names, they're trying to do a good job of showing that the low is in from a few weeks back. They all had that little feisty move off the lows, and they did hold higher. Just to show you a few, you look at CVX. What I mean by a feisty move is, from here straight up, it's pulled in and it's getting tight. So today you want to see if some of these oil names can continue to the upside versus just roll down. If I were to look at a few, I would look at that. I would look at XOM. XOM also, did give you a reflex move up, got tight again. So if the market wants to have a broad-based move, it's going to need some of these oil names. They've been absolutely annihilated. Hopefully, if you follow my 200-day rule, you got out well before any of this crazy damage. Some guys are, talking about Halliburton also. They all look kind of the same. They've all had big breakdowns. They had a low, a move off the low, and they're trying to hang in there and stay somewhat relevant. I'm not sure if they're going to hold, but if you're in it, be in it versus this. And if they want to get any kind of follow through, they have to break above these triangles, and then, loads of resistance in front. That's the problem in the markets right now. There are loads of resistance higher. The question is, where can they penetrate to? And not every stock's going to be able to do the same type of upside potential or have the same upside potential. A lot of the stocks in my go-to list in Redler All Access are the ones that have the best chance. Yesterday we put in Under Armour. That stock actually looks pretty good. It's above all moving averages, so it's showing accumulation. It did break above this little trend line yesterday, so maybe gets on its way back to highs. Nike also, you could deem this a leader also, almost above all moving averages. It's got some resistance in front, but it is tight. So again, look to some of these leaders to see if they let them go. Nike, Under Armour. Look at Starbucks. Starbucks also. Great looking chart. Looks a lot similar like the ones that I just showed you, getting above all the moving averages. You could trade versus this, and at some point, if the market actually really wants to be healthy and have some leaders, this too could make its way back. And this is not quite a leader right now, but Disney itself, if you wanted a clue why you could have been long overnight, this one actually cleared this range yesterday, and now we'll see if it could power through the 200-day or not. Your next resistance probably comes in somewhere in here, but this 200-day will be pretty important to see whether it gets reclaimed or rejected. So all in all, we started the week with a gap and go. A lot of people probably came in flat because you didn't know what was going to happen over the weekend. You did have opportunity yesterday to work into positions that you like if you weren't in them already. Today we're getting upside follow through, which is nice. A lot of traders make a living with day-and-a-half moves. It's even better if they can go for 1 to 3 days or more. Lately it hasn't been that way. We have resistance points in this wedge that we just went over and outlined. You want to have them written down, perhaps sell some longs into them, and then figure out whether or not we hold. If you want to short versus those levels, fine. But if we power through them, just know, there is, spots above that we could reach. Maybe not today, but in the coming week, we do have the Fed as far as liftoff in the big meeting, the 17th, which is, over a week away, and the buybacks are still here. So just don't blindly short these things thinking that we have to retest those Monday lows and we have to be in a big bear market like most people would like, that you listen to on TV. We've talked about if you're a macro investor, staying the course every month, putting your flows in, not reducing your 401k, not going to cash because sometimes you don't go back, and hopefully you stayed the course because it's these type of phases that get you a better average cost. Nobody wanted to buy the market during the first 7 months. It was a bunch of computers trading together. So now you just had your first bigger correction than we've seen in 3-4 years. And I know some guys took advantage of it. If that's you, congratulations. If you're trading around it, here's a spot to do it. And if you were jumping out of your skin, last week, today you could probably buy some insurance cheaper as the VIX has been, probably crushed over 10 to 15% in the last 2 sessions. And that's your morning call. I'll see you at the recap. Have a great day.